Is on luxury goods and basic essential items like food. And that brings me to our big hard fact today. According to the National Bureau of Statistics, the consumer price index increased by 17.95% in June this year over May of last year. What that basically means is that on average, the price of goods last month was 17.95% higher than they were a year ago. That's double digit inflation, and it's something that economists always tell you that we have to avoid. But the question is how? 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 Every day you hear from the central bank, whose job it is, by the way, to fight inflation. You also hear from the government at all levels, who are supposed to implement policies that at least don't add to the inflation. But how can you properly judge whether their efforts are helping or harming? Now, I have to give credit to Ibikunle, who called me last week, and we had a bit of a debate about inflation, right? And I want to play you that debate so that you can refresh your mind, see where we're coming from, and see the reason why we've decided to have this conversation today.
This is Ibikunle calling from Lotify by Korodu.
Happy Salah, Ibikunle.
Same to you. Thank you very much. On the prices of goods and services, I want to say that we can't take that away from inflation. So I still maintain that inflation is imported into this country. And our culture has taken the dimension of the foreign culture. Sandra, let me tell you one thing.
No, hold on. Hold on. Before you tell me the one thing, explain what you mean by inflation was imported into this country.
It's due to foreign culture. You see people buying expensive wines that you can never imagine.
God. Okay.
Are you telling me? Somebody was telling me that one ram costs 200,000. That is even small. 300,000, 400,000 naira. Why would it not cost up to that? You see somebody wearing a shoe of 50,000 naira, pricing a ram.
Okay, let me ask you. Let me ask you something. What percentage of the population buys expensive wine?
It doesn't matter.
No, it does matter. Ibikunle, come on. Ibikunle, you're a teacher, right?
Of course.
So calm down. It does matter. You cannot go and tell your students it doesn't matter.
Okay.
You can't do that. What percentage of the population buys expensive wine? How could such a small percentage of the population affect the entire food market?
It doesn't change the psyche of our people. It doesn't change. I'm just asking. It doesn't change. Sandra?
Oh, you're asking if it doesn't change the psyche of our people?
Change.
What changes the psyche of our people?
I'm telling you that inflation, is imported.
No, please don't say that.
Foreign culture.
Inflation is imported due to foreign culture. Lagos, I have somebody who thinks about and writes about inflation and other economic issues for a living. He's the editor-in-chief of Steers Business, Tokumbo Afikuyomi. Welcome back to Hard Facts.
Hello, Sandra.
So you listened to that audio. I want to hear your thoughts. What do you think about the points Ibikunle was making there?
Okay, well, I guess very, very funny, interesting conversation. I guess the main thing to say, which both of you got to in the end, was that the main causes of inflation is not to do with, expensive wine or anything along those lines. I think that's the thing I think we should all focus on. You guys got there eventually after a lot of, discussions back and forth. But I think the main thing that everybody just needs to understand is that the main causes of inflation is not any culture or any foreign culture that's being imported into Nigeria per se, but more a lot of domestic issues that Nigeria itself suffers from.
But before we get further into it, is there any country in the world with negative inflation or flat inflation? And secondly, what do economists believe is a good target inflation rate for Nigeria?
Yeah, that's a very good question. Yes, there are countries actually that have negative inflation, also known as deflation. So on average, their prices are going down on a monthly or yearly basis. There are a few African countries actually can't remember them top of mind, but a few of those small ones like Mali and Co. I think have negative inflation.
God, when?
And well, you say that, but economists are actually more scared of deflation than inflation. They get more frightened when prices are falling down, because what it means is people will start to delay their purchases. So if you know that egg is going to be 17, if egg is 17 naira today, and you know that maybe in 1 month's time it might be 16 naira, you won't buy egg today, you wait. So everybody's
Yes.
just playing a wait game. At the end of the day,
Yes.
nobody buys anything anymore.
Okay.
Because everyone's just waiting and delaying their expenditure. So economists are actually very scared when there's negative deflation.
Okay.
But yeah, your other question about a target. So the
Yeah.
thing about inflation is no country actually targets 0% inflation,
Okay.
right? So
Okay.
there's actually an understanding that we do need some inflation. And the reason is, number one, the thing I just mentioned about how scary deflation can be. So you don't want to be in that zero area, because you can quickly go into deflation. Then you enter that trouble I spoke about. The other thing as well is a bit of inflation also helps the government because of debt. So if the government borrows, 100 billion today, if there's some inflation, then in the future it pays less than 100 billion back, right? So it helps reduce debt. The same works for private individuals as well. And it also just in general, again, helps reduce that whole thing of I'm going to delay my expenses. It makes people spend quickly because they know prices are falling. So those are some of the reasons why people want some level of inflation. And different countries have different targets. So Nigeria has a target of between, I hope I get this right, 6 to 9, around, it's a high single digit, around 9% is currently Nigeria's target's inflation figure.
What do economists believe is a good target? Do you think that that's a good target?
I think low single digits is a good target. I think all the advanced economies, their targets are 2%. So that's where most advanced economies like the US, Canada, the UK operating. But for developing countries, there are many reasons why it's difficult for them to actually achieve that very low digit inflation.
Now, you see, the conversation I want us to have today is to try and understand what causes inflation. That way, when we see a new policy, we can assess what its net effect on inflation would probably be. And then we also need to understand what fights inflation, right? So this will let us properly judge steps taken by our central bank and all the other actors. So that's why I'm asking you the next question. In general, what are the possible causes of inflation? And in the specific case of Nigeria right now, what are the major factors causing our double-digit inflation?
Okay. The first question, I'll speak generally speaking,
Okay.
not Nigeria specific. So generally speaking, there are three main causes of inflation. The first is called demand pull inflation. So demand causes inflation. So when you have people wanting to buy goods and services, people have, say, extra income, and everybody say there's only everybody wants to buy an apple all of a sudden. If too many people are chasing that apple, the price of that apple increases. So there's demand inflation, consumers wanting too much goods and services. That's the first cause of inflation.
Okay.
The second cause of inflation is from the supply side, and it's called cost push inflation. So cost related inflation. So that means the inputs that are used to create the goods and services, those inputs become more expensive. For example, if you are making, say, bread, if the sugar used to make bread increases in price, bread itself will also become more expensive. That's one example. Wages. If employing workers becomes more expensive, then the goods and services those workers also provide will become more expensive. So that's cost push inflation, where the raw materials or the inputs used to create those things become more expensive. And then the final reason, which most people don't talk about as often, and it's a bit harder to conceptualize, is expectations. So the expectation of inflation leads to inflation. I know it sounds a bit like magic, but hear me out.
Okay. Because I'm looking at you with my corner eye like, eh?
Okay, hear me out.
Okay.
If everybody today is expecting more inflation tomorrow or next year, they are going to do things today that will actually lead to more inflation today and also in the future. Let's give an example of Coca-Cola. I'll give two very quick examples. Coca-Cola. If I'm Coca-Cola and I'm branding my Coca-Cola bottle and I want to put a price on it, let's say 100 naira, I want to actually pay somebody to print 100 naira on that bottle. If I'm expecting that in a year's time, the things I used to make Coca-Cola or inflation is going to increase, I'm not going to print 100 naira there because I know that I'll have to pay again. I'll have to pay the brand team more money to change that price in the future. And even worse, my customers will be annoyed if I keep changing my prices. Imagine how irritating it would be if Coca-Cola every single month is going from 100, 110, 120. Yes. So today, the fact that I expect it in the future, the price I'll put today will be almost a future price.
So a self-fulfilling prophecy.
Today. Exactly. I'll put 200 naira today just because of my expectation of tomorrow. So that expectation causes inflation today, right? The other quick example I'll give is workers. Now, this doesn't happen as often in Nigeria, but it does still happen. If I am going to be employed by somebody today and we're negotiating a contract, if I'm expecting inflation to be high next year, 5 years' time, bear in mind that today's inflation rate of 17%, or let's look 20%, means that food prices are going to double every 3 to 4 years. That's not a small matter. I'm going to be spending double my money on food every 4 years. So if I'm agreeing a wage contract with an employer today, I'm not going to agree something that does not allow me to afford that doubling of food prices in 4 years' time. So I'm going to be even stricter on how much money I can get in that wage contract. So things like this, especially when you have an informal economy where people are able to hoard food and change, that leads to inflation as well.
So can we say that the longer it takes for a product to get to market, the more likely it is that inflation will be baked into the price ahead of time, a product or service?
Yes, I think that's a fair thing to say, because there are many opportunities for other things to creep into it. Like, for example, you have to make future estimations, and if those future estimations are based on inflation being high in the future, then as you said, it means that there will be more likely a chance that inflation today or the price today will be made higher as an anticipation of that price.
So let's come to Nigeria now, because that was the second part of my question. What are the major factors causing our double-digit inflation in Nigeria? Now, like you said, we've established that it's not people buying wine. It's not some people buying expensive wine or wearing expensive shoes. So what are the major factors causing our double-digit inflation?
Yeah, so for now, right now, it's simply a supply issue. There are supply constraints and there are many shortages in Nigeria. So think of inflation started to really creep up right after the government closed the border, right? The government closed the border back in 2019 now, I think August 2019 or July 2019. And what happened as a result was that there was a shortage of goods, especially food products, right? In conjunction with that, the CBN and the government is on this bandwagon of banning food imports. That has also led to increasing the price of food because there's a shortage. This is that cost push inflation thing I was talking about. Maize becomes an issue, grains becomes an issue, rice, you cannot import rice anymore, becomes an issue. So if you're buying rice from your buka, or you're buying rice in a restaurant, fried rice or jollof rice, everything just becomes more expensive. Chicken as well. A lot of chicken comes through the land borders as well. So all of these moves that the government is doing under the hat of let Nigeria produce more of it itself, even though that can happen in the long run with the right policies, in the short term, what we suffer from is higher prices. The other issue, specifically in the agricultural sector, is insecurity. Now, all the bandit issues, the Boko Haram issues, Middle Belt, all of these issues lead to a scenario where farmers are now scared to produce their usual output. So they're not able to make as much as they used to as a result of these insecurity issues. So that's a problem. And then finally, one that just always will be there in Nigeria's story. It's just infrastructure gaps, bad roads, poor electricity, poor access to water. All these things systematically make the production of anything in Nigeria more expensive. Even if it's a service, generator cost, all of those costs just consistently make, um, you know, producing anything in Nigeria more expensive. So systematically, that is what leads to high prices here compared to other countries.
Lagos, I want to hear what you think about what we've talked about so far. 0700 Men call me on that number, and women call me on 01465 What do you think about the points that our guest on the show has made so far? Tokumbo Afikuyomi is the editor-in-chief of Steers Business, and Steers Business provides insight and analysis for businesses in the country and abroad. So they are a business publication based right here in Lagos and in London as well. They're online only, and they offer really premium work if you want to get serious insights into Nigeria's economy, Nigeria's political economy, etc., etc. 99.3. Hello. Sorry about that. Call back if you can. Hello. Hello.
Hello, good evening.
Good evening. What's your name?
My name is Fidelis, calling you from myself.
Welcome, Fidelis.
All right, Sandra, I want to quickly ask you,
Okay.
the inflation on gas, what is the cost? Because the illustration your guest gave now was on food. What about gas and other things?
Okay.
Gas currently now, they sell 12.5 kg of gas for 6,000 as against 3,005 last year. So what could be the possible cost of it?
Okay, thank you very much. What's causing gas inflation, he wants to know.
Hi. Oh, sorry about that. So yeah, I mean, on gas front, the NNPC actually spoke about this recently. I think they remember how I talked about cost plus inflation. So there are things where international gas is something that's internationally priced, and it's something that we also import. So the NNPC has said that the increase in gas prices is something that is global, and so that's what's impacting us. If you think about the pandemic and what has happened to supply chains and the rest of it, that has impacted how we are able to sell as much gas as we can, and because of the restriction in supply, because of the pandemic, gas prices have increased. But it's something that the NNPC talked about recently as well.
I see. All right, 99.3. Hello. Ooh, sorry about that. Hate it when that happens. 99.3. Hello.
Hi, Sandra.
How are you, sir? What's your name?
Good evening. It's Adegoke from Lekki.
Welcome. Go ahead.
Like your guest said, I don't think it's only supply that is the issue. I think we, as a country, we are not exporting. We are just totally based on importing. So why would the closing of the border now cause inflation? Why? It's because we are non-productive in Nigeria. We always depend on bringing in. So when there's lack of productivity and harnessing of the natural resources and the opportunities we have, the agriculture in Nigeria, then inflation will definitely come in because we are not producing, we are not exporting. Just like we are not exploring our oil here, going down outside the country to refine and then bring in again, and then the price keeps going up. So I think that's one major area we're having issues.
Adegoke, thank you so much for calling. Now, whenever people make the point that Adegoke just made, I often, want to add a rejoinder and be like, well, you can't just wake up and start exporting, right? Like, it would be nice to just wake up and export, but you simply can't just wake up and start exporting. So it comes back to the point you were making earlier on about infrastructure gaps, right? So with Nigeria and exporting and our dreams to be able to export someday, and then you consider the infrastructure gap that we have, it almost seems like it's a catch-22 situation. Now, we've got 2 minutes before we have to take a break, so I'm hoping that you can give me a short answer.
Yeah, definitely catch 22. But like you said, it can't. It's not magical, right? And there's this thing against importing in Nigeria, which we need to be careful about. Importing in itself is not a bad thing. Apart from North Korea, there's probably no other country that doesn't import a lot of their goods and services. Like the food we import is still much less than South Africa's import bill. And South Africa
Interesting.
has like what to like 60 million people compared to our 200 million people. Yet they
Interesting.
import still way more food than we do, right?
Wow.
So importing in itself is not an issue. And like you said, on the exporting side, if we can't even solve the domestic side, production in domestic front, then what hope do we have to export goods, you know, in a competitive manner internationally that can compete with the international people? So it's a very long game.
It's a very long game, he says. There's something you mentioned when we started earlier on, and I'll bring you back to that point after the break, so you have the break to think about it. You did say that there are reasons why developing countries cannot expect to have an inflation rate as low as the more advanced economies. So when we come back from the break, I'm going to need you to tell me what those reasons are, what those factors are. I'm also going to need you to maybe let me know if infrastructure gaps are one of the reasons as well. So after the break, we'll have that conversation. We're also going to talk after the break about one of the main mandates of the central bank in the modern era being fighting inflation, right? So what tools does the central bank need or have to do that? That and so much more coming up after the break. Lagos, you're listening to Hard Facts on 99.3 Nigeria Info. I'm Sandra Ezekwesili. Don't go away.
A multinational company in Lekki, Lagos is massively recruiting independent sales executives that own a car and a valid driver's license. Are you ready to work with the company with the most history worldwide? Are you ambitious, a smart worker? Do you have a great attitude? Ready to take your career to the next level? Here is an opportunity for you. Please call 0815-705-0505 or 0905-637-4258 to book for an interview.
Now you fit withdraw money even if you no hold your card for any Momo agent where they near you. Just dial *223# to take touchlight the Momo agent where they near your domot. Momo agent. Safe, fast, no wahala.
You don't wait for life. You go to meet life. It's not about how many chances you get. It's what you do with what you've got. Morning after morning, cup after cup. Start strong, finish strong with the stimulating aroma and rich, creamy taste of Nescafe 3-in-1. It all starts with a Nescafe.
Everybody needs a little help every now and then. Sometimes it's sugar or salt. or an extra hand to change a flat tire, or a small loan. At Kuda Microfinance Bank, we believe that your bank should do more than just store your money. We want to do more for you. So when you use your Kuda accounts to pay bills, buy airtime, and make transfers regularly, we'll offer you an overdraft, which is a low-interest loan that you can take anytime you need it. No long talk, no collateral, no paperwork involved. Just download Kuda on the Play Store or the App Store, open a Kuda account, and use it regularly to qualify for a Kuda overdraft. Kuda, free banking for you.
Who will rise from the ashes of postponement to claim their place among the greats? And will the greats rise again? Watch the Olympic Games Tokyo 2020 on Supersport from the 23rd of July to the 8th of August. Watch them rise at all gold medal events on 8 dedicated channels. Get and stay connected to DSTV. Watch them rise on Supersport, your world of champions on DSTV.
You don't wait for life. You go to meet life. It's not about how many chances you get. It's what you do with what you've got. Morning after morning, cup after cup. Start strong, finish strong with the stimulating aroma and rich, creamy taste of Nescafe 3-in-1. It all starts with a Nescafe.
Need money? Rent money. Need money? Rent money. Need money? Rent money. Visit rentmoney.com or call 0700 5500. Need money? Rent money. Need money? Rent money. Need money? Rent money. Need money? Rent money. Visit rentmoney.com or call 0700 5500. Need money? Rent money.
Are you ready to give your child a little taste of Canada this summer? Now you can. At Camp Days, hosted by Cornerstone Canadian Academy, a place to learn, play, blossom, and have fun. Come join us in Lucky from August 2nd to 31st. There will be sports, computer activities, and so much more for kids ages 3 to 12. Limited spots are available. Register now by calling 0806 234 4242. What are you waiting for?
Who will rise from the ashes of postponement to claim their place among the greats? And will the greats rise again? Watch the Olympic Games Tokyo 2020 on Supersport from the 23rd of July to the 8th of August. Watch them rise at all gold medal events on 8 dedicated channels. Get and stay connected to DSTV. Watch them rise on Supersport, your world of champions on DSTV.
Bringing you the latest weekly happenings from pop culture, music, movies, celebrity drop-bys, all wrapped up in great conversation on the Buzz Info. With radio's fabulous Ugochi Adua and Pundit every Fridays from 10 p.m. to 12 a.m. here on 99.3 Nigeria Info. Let's talk.
99.3 Nigeria Info, your number one station for talk. Let's talk.
I'm Sandra Ezekwesili. This is Hard Facts on 99.3 Nigeria Info. And today on the show, we're talking about the causes of inflation and what can be done to tame it. I have an economist on the show with me. He thinks about the economy. He writes about the economy. In his office, it's called CBN. And he's the editor-in-chief at Steers Business. Steers Business is a business publication that you should check out totally. His name is Tokumbo Afikuyomi. And Tokumbo, before the break, I did say that I wanted to find out from you what you thought were the reasons why in developing countries they don't have an expectation of inflation rates as low as the more advanced economies. What are those reasons? What are the factors? You mentioned infrastructural gaps before the break. Are infrastructural gaps part of the problem?
Yeah, no, it's a very interesting question. So I'll speak generally and then a bit more into Nigeria's context. So in general, the reason why developing countries have higher inflation is because developing countries grow faster than advanced countries. So advanced economies on average grow around 2% a year and their GDP goes around 2% a year. Whereas the more developing or emerging markets grow closer to the higher single digits. So like China of 6-7%, and the Ethiopia, which did 10% for the last decade before the pandemic. So that's one of the major reasons why developing countries suffer more inflation. They grow faster. Like I explained before, when people have more income and they are demanding for more goods and services, that increases the price of goods and services. The second thing is the funny example I gave you about expectations. So the IMF did a study on this, and they found that 70% of the reason for higher inflation in emerging countries is because of expectations of inflation. So 70% of that can be explained by that phenomenon I explained about expectations. Even the CBN has written a paper on this, and they found that expectations of inflation are the number one cause or predictor of inflation in Nigeria. So that I can go into more detail throughout this call as to how it happens in Nigeria, but that's one of the reasons as well. And the final thing is just mismanagement in developing countries. So think of Nigeria's situation. One day there's land border closure. The next day, the CBN is banning imports of food. The one day there's depreciation of the exchange rate from 500, and then in 3 months' time it's 700. To the pound. So just mismanagement of the economy just increases the amount of shocks that people are going through, and then that just leads to more inflation compared to a advanced economy where things are more steady eddy. You don't get those, Okada is now banned, and all of a sudden people are having to rush the bus, and then the bus prices are now increased in a space of 1 week, right? So you don't get those mismanagement shocks in developed countries.
Now, like I said as well, one of the mandates of a central bank in the modern era is to fight inflation. So what tools does a central bank have to do that?
Yeah, so in general, again, before we go into Nigeria, the main tool the central bank has to tackle inflation is interest rates. So the way it's supposed to happen and the way it's written in the textbooks is the CBN or the central bank says, hang on, there's too much inflation in the country. I'm going to increase inflation. I'm going to increase interest rates to make it more difficult for people to borrow money. Businesses find it harder to borrow money. So they spend less. If they're spending less, then prices will not rise as quickly. And the opposite happens the other way around. If they want more inflation, they will reduce interest rates. And then people start spending more, borrowing more and spending more. So the main tool is actually just, the interest rate channel. That's how the CBN is supposed to tackle inflation. Now, in Nigeria, it's a bit trickier because that channel isn't as strong, right? Ask the typical person on the streets. They don't know, they don't use, or even myself, I don't know what the current interest rate is for borrowing money to make money my purchases, right? We don't, that channel is not strong for us, right? So what the CBN says time and time again is, we don't actually have, this is CBN speaking, we don't have the power actually to deal with today's inflation because it is being caused by structural issues. It's being caused by flooding, it's being caused by infrastructure gap, it's being caused by insecurity. So we don't actually have what it takes. It's not part of our toolbox or our toolkit.
Do you believe them? Is that true?
No, I don't. I don't because that aside, yes, of course, CBN cannot. Although Mayfield is involved in farming, although CBN cannot deal with flooding and insecurity, right? But the other part of it, which is the stuff I mentioned around expectations, right? And there's still that financial market channel where if there's too much credit, too much borrowing, they are loaning so much money, to agriculture and other sectors. When that becomes more rapid, that also leads to more inflation. But that thing about expectations is very important because the CBN is not showing to people that we are serious about inflation and tackling inflation. You cannot expect a Coca-Cola to not expect more inflation in the future, right? You cannot expect, investors to not expect more inflation and then therefore carry their dollars out of the economy, right? If the CBN is just there sitting down on its arms, on its hands, saying, look, we can't do anything about this. We're going to leave interest rates the way they are. We're not going to increase interest rates. Almost regardless of if interest rates works or not, the signaling part of it, like the signal to the economy that, hey guys, we're serious about this thing, is powerful enough to help tame inflation. But that's something that I know people at the CBN know, but they're just not doing it at the moment.
Why do you think they're not doing it at the moment?
Well, I guess inflation is a tricky thing. And the reason is because it almost goes opposite with growth. So, for example, I mentioned loans. If the CBN loans too much money out, for example, 1 trillion was loaned to the manufacturing sector. I think that was the package is 1 trillion. They've already done 800 billion of it as a result of the pandemic to help the sector out. But the problem is when you give out 1 trillion in loans to manufacturing, that increases inflation. But why did they do it? To help growth. So growth and inflation go in opposite directions.
Oh, wow.
You can't help one without helping the other one.
No, wow.
So it's not. So for now they are saying, "Hey, pandemic, our focus is on growth." But the reason why they are focused so much on growth as well is because of the gap in the fiscal space. The federal government's job is the one that's supposed to help manufacturing sector and the agriculture sector. That's not the CBN's job.
That brings me to my next question. Because there's supposed to be a separation between the central bank and the federal government. So the government isn't supposed to be able to give instructions to the CBN. But is there room within that arrangement for the CBN and the federal government to collaborate legally to combat inflation?
The thing is, even if there is room, the reason why central banks were created to be independent is because, and this was written in textbooks in the early 90s, even without even thinking about Nigeria. It was not even a Nigerian thing. It's because politicians, and I don't even mean Nigerian politicians, I mean all politicians, are always going to be biased to helping growth and not inflation. They're always going to be biased to stimulating the economy and just loaning and printing. That's always going to be their bias. And a politician is not elected to reduce inflation. The voters are not electing a politician to reduce inflation. So there's almost no world in which a politician and a central bank can work together to tackle inflation.
Which is why you had that blow up between Trump and the CBN in America.
Exactly. So that's why Trump was so angry with the Fed, because the Fed was doing something opposite to what he wanted. But that was why the independence was created, so that one is tackling inflation, which people care about, even though they don't vote politicians to deal with, and the other is stimulating growth. Right? That separation has to be there, otherwise. Situation.
And the reason I asked that question was because of the border closure. When it was announced, lots of economists like yourself predicted that it would trigger inflation. I should assume that the CBN realized it as well. In a situation like that, where the government is taking a step that is bound to raise, what's the word now? CPI, the CPI. What is a central bank expected to do? Should they warn or advise the government? Should they start taking deflationary steps? What are they supposed to do there?
Yeah, no, I mean, like you said, they are supposed to start taking deflationary steps, right? They have models in the bank that predict what will happen to inflation rates. So they know what's going to happen as a result of that kind of policy, right? So the prudent thing to do would be to already put in place measures to reduce the amount of inflation in the country, right?
Right.
The CBN is involved in stuff like, maize, stockpiling, for example.
Right.
So the situation where the government banned import of maize, right, recently, was earlier this year or last year. And then they saw that prices increased.
Right.
What did the CBN then do later on? Okay, guys, we're going to release maize into the market. Sorry that, it was banned though, but let's release maize into the market to help you guys out. Already after the price increase had happened, right? So it's kind of like, okay, so why did you ban, if you knew this was going to happen to us, why did you ban it? Or two, why didn't you just release, the extra maize instantly so that we didn't have to go through this mess, right? So that's kind of how the situation is meant to work between the two. But here we had the CBN actually backing the government for those moves.
Why did they do that?
It's a bit complex. So the reason because of exchange rates. The thing is that unfortunately for us in Nigeria, we care too much about exchange rates. far too much than we should. And the CBN itself as well, almost anything it does is because of low-key. There's an exchange rate angle to it. And I'll explain. The CBN is in charge of our foreign reserves. The CBN is also in charge of keeping the exchange rate fixed at the moment at 400 naira to $1.
Okay.
And it will be seen as a failure to Emefiele or Buhari if that exchange rate was to decrease in any way. And so that is what everybody is fixed on. So in the CBN's eyes, if the government is able to ban import of food or close borders, and people start producing those things internally,
magic, that's it.
Well, if it's able to happen, then they think that they will not have to give people dollars to import those things anymore. Right.
Well, how markets?
That's the thinking. That in the end, the exchange rate will be kept stable.
Well, how markets? Lagos, let's talk. 0700-993-993-993. Women call us on 01465-7190. Men call us on 0700-993-993. Let me take a look at WhatsApp where you've sent in a number of messages. Here's this one. Oh, okay. All right. So let's restart the WhatsApp so that the messages can start coming in. In the meantime, let's talk to John. John is in Bagada. Hi, John. Welcome.
Yeah, good evening, Sandra.
Good evening.
Yeah, I heard what your man is saying, but I want to tell you it's not so peculiar to Nigerian case.
Okay.
Nigerian case is very different. Number one, inflation is too much money pursuing few goods.
Okay.
Hello?
Okay, I'm listening.
In other words, where the supply is little, then the demand is more than supply.
Okay.
So, in our own case, how did it happen? This type of inflation in Nigeria is called hyperinflation.
Okay.
There's nothing like positive and negative inflation. Inflation is always negative.
Okay.
Now, to solve our number one, we can see that we do not have enough rice. Why do someone wake up and ban the importation of rice? So it's caused by man. It's human factor.
Okay.
Number two, you can see that our budgets before, we used to make budgets in millions. Now we make budgets in billions. Why?
I'm guessing you'll tell me?
Yeah, we make budgets in billions now. So you can see when we have too much money in circulation and we have less supply of the commodity, automatically the price is going to rise.
Okay.
And also, a good economist will make any government policy based on all things being equal or ceteris paribus.
Okay.
Now, if, for example, government wake up and say deregulation, privatization, commercialization, all these government policies is based on all things being equal.
Okay.
What are the factors of all things being equal? Factors include the wage income of the people, the price of goods in the market, transportation costs. Are you listening?
I'm listening, yes.
The standard living of the people, all these things, and so on and so on. We sum up before government will wake up to make any government policy. Are you getting me?
I'm getting you.
Now we are running government as a commercial venture. Government is never a commercial venture. Government is never established to make profit from its citizens. Are you getting?
Okay.
But Nigerian run government as a private sector. Everything that we have, like NEPA, all those NITES, we have all commercialized it. Why? To make profits. Profits for who?
Okay.
Hello?
I'm here. I'm
Hello?
listening. I'm listening.
Get me?
I get
so
you.
All this, our problem is that you bring an economist now to come and hate the CBN. The CBN does not even have the knowledge, does not even know the meaning of inflation. Because a good CBN will advise Buhari, the president, please don't ban importation of rice. CBN has to play an advisory role based on the economy. Please don't ban the importation of rice because we do not have enough rice in the market. President, please don't ban the importation of maize because we don't not have enough maize in the market. If you do this, you are going to bring inflation caused by man, which is called hyperinflation. Are you getting?
I'm getting.
The real inflation is called runaway inflation. That
Okay.
is not our own case.
Okay.
And if government does not rescind its policies, it's going to go up and up and up. That's why it is called hyper.
John, thank you so much for calling. I would have loved to keep talking, but we do need to let our editor-in-chief of Steers Business, talk about some of the points that John raised. Tokumbo, what do you think?
Yeah, no, I mean, John is clearly upset with the situation on inflation, that's for sure. But no, unfortunately for us, we're not quite in hyperinflation mode yet. I mean, I said yet, ever. I don't, hopefully never. Hyperinflation is a different story entirely. That's like what Zimbabwe went through, where, bread was 1 million, in fact, 1 billion to buy a loaf of bread, right? Or what Germany went through during the World War, where the currency couldn't even buy anything anymore. Like, it just couldn't. In fact, the cost of printing a Dutch mark back in the war was more than how much a Dutch mark was actually worth, right? Nigeria is not there. We're not in hyperinflation mode. So thankfully, John is wrong on that front. But I mean, what he said that was correct for sure is that, there's a supply issue, right? There are too many mouths to feed and there's not enough to feed the mouths, right? The demand and supply is not quite there in terms of being aligned, and the government makes it worse by restricting supply even further, right? Bad enough what we're dealing with here, and then they say, okay, you know what, you can't even import what you're eating anymore. So that's definitely correct.
We've got Chris from Amua who says that Ibikunle is right, that Ibikunle did not explain himself properly. He says our inflation is imported primarily through our lifestyle. If you import more than you export, it gives more demand for those goods. So our quest for importing things we can ordinarily produce makes it difficult for balance of trade to be positive. He goes on to say South Africa imports more than Nigeria, but their export is also high in getting their balance to be on close book balance. What do you say, Tokumbo? Yeah,
no, so I mean, there's no, the relationship between a balance of payments deficit, so when exports are more than imports or imports more than exports, doesn't necessarily mean that you're going to have inflation or no inflation. So many countries, the US has a balance of payments deficits. There are countries that in goods or even in services are importing more than they're exporting, but it doesn't necessarily mean that they're going to have more inflation, right? The way inflation comes in, the way imports and inflation are related is that, I was speaking to a colleague, one of my colleagues, who's managing editor at Steers, about some projects he worked on bread in Nigeria. So it turns out that almost all the inputs, the yeast, the sugar, the flour, is imported. So when you have that kind of situation, and when globally prices, and right now, actually, global prices of food are reaching record highs. So this is not a Nigeria problem, actually. The UK, the US are also experiencing very high food inflation.
Right. Mm-hmm.
So when that is happening, then sure, the stuff we are importing that is related to those food products would increase in price, right? But let's not overemphasize that, because that's not everything, right? According to the MBS, it's probably not true, but according to MBS, only around 10% of our food of inflation at the moment is from food imported aspect. So it's probably a bit more than 10%, but let's not use that as the whole entire story, because it's not.
It's not. Okay. Well, we have a few more comments here. I'm doing my best to take as many as possible. If the CBN could wake up today and ban sales of dollars to BDCs, not minding the forex inflation it will cause, how can such an institution fight inflation in other fronts? Even though the CBN accused the BDC stakeholders of sharp practices, is it enough to put a blanket ban on all? Why not identify the defaulters and fine them? Dollars after the pronouncement has risen from $504 to $515 just today. That's a message from Prince in Ibejuleki. Speaking of, tomorrow on Balogun and Broad, we're going to talk about this new thing from the CBN. But yeah, very quickly, let me get your thoughts on that.
Yeah, no, I mean, this is very typical style. I mean, even when there's nothing entirely wrong with the objective of, okay, bureau de change is a conduit for corruption and all of that, right? That's a problem. It's not everybody uses bureau de change. I don't even know if that's going to put me in trouble for saying that on here, but we all use bureau de change, right? Just because a few agents are using it for bad malpractices doesn't mean everybody has to suffer for it. So if you do choose to ban bureau de changes to solve that problem, then at least don't let it over harm the normal citizens like you and I who also use that space. So it's either you're going to say that the banks are going to give us Forex freely, as in I can walk into a bank and change money the same way I could with the bureau de change, which is what can happen in other countries, then fine. If that's the case, no problem. But if that's not going to be the case, then don't be surprised when, like the person said, the exchange rate starts to, tumble as a result of this policy. So again, even when Nigeria has maybe underlying good intentions with their bans, the execution of it is always poor.
Tokunbo Afikuyemi is the editor-in-chief at Stairs Business. I wish we had more time. I love when he comes on the show because I learn so much. But we are out of time, and I will thank you, Tokunbo, for your time today. This was awesome. Thank you so much.
Thank you for having me, Sandra. It's always lovely to be here.
Okay, Lagos, you can listen to our conversation again by visiting our website, nigeriainfo.fm. Nigeriainfo.fm. Listen again to Hard Facts. Pick out this particular interview and rewind, fast forward, pause, do with it as you like. I'm back tomorrow, bringing you the glass ceiling, bringing you also Balogun and Broad. But in the meantime, find me on social media, Sandra Ezekwesili. Just do a Google search, Sandra Ezekwesili. You see all my profiles, and then go ahead and follow. Those are Hard Facts, Lagos. Good night.
99.3 Nigeria Info. We'll be right back.
You get money for account. You want take small thing inside. Just do cardless withdrawal with any Momo agent.